Yo, what is going on, guys? This is your boy Capco, and you guys are watching Did You Clip It? Today, I have a special video for you guys that's a little bit different than my rest of my content, but I want to get into a little bit of investing and trading and show you guys some of the things that I learned, and I want to give you guys a short little, not only lesson that I've kind of learned a couple days ago, but almost a crazy mistake that I did, and without even me noticing that it was a big deal until I read a little bit further. And man, what I have to just say is options is a dangerous game, and I hope that this video will show you guys some good tips before you start trading, because I almost got myself caught lacking. So imagine waking up on the Monday morning, you're excited because you know you got a new week ahead of you, you can make some new little plays, maybe make some profit, right? Your eyes are barely open, you ready to grab your phone, you look at your portfolio, and instead of you seeing your regular numbers, your regular graph, you see that you were assigned $1,000 of a stock that you were not even supposed to own. And that, my friends, can happen with trading options. You know, as us traders, we sometimes forget what a call option and what a put option is. You can't just think, oh, it's just gonna go up or it's gonna go down and I'm gonna make some profit. If you think like I'm thinking right now, you can get yourself caught real bad. Basically, you can end up in your worst nightmare. So today I'm going to be showing you guys what do I mean by that. I'm going to show you guys how dangerous a call option or a put option can be if you're not understanding it fully. So without further ado, let's get right into the video. Alrighty guys, so imagine you waking up and this is your notification, right? You waking up and you looking at this and you're like, you were assigned on your SPY 408 put options and bought 200 shares of SPY, and you're wondering how the hell I even was trading over the week, right? You were just sleeping, and guess what? You were assigned your options. I mean, of course this happened on a Friday, and let me explain you why it happened on a Friday. And before we even get there, I want to just understand a little bit of what I'm talking about. So for those who don't know what a call or what a put option is, I'm going to try to explain. Hopefully you are using Robinhood just like me, because Robinhood has saved me hella times. If I would be using any other brokerage account, I think I would have messed up so bad, because honestly Robinhood taught me a lot of more things that probably any other brokerage would have. So what is a call and a put option? Basically, a call option is a option that gives you the right but not the obligation to buy 100 shares of a stock at a specific price, which is the strike price, before or at the expiration. You typically buy call options if you believe the stock price will go up. The same thing with put options, the same thing happens, but if you are just assuming that the price will go down. So I want to show you guys with actually me opening up Robinhood and show you guys an example of how someone woke up with an assignment and how does it work. Because a lot of people, when we're trading options, we think, you know, a call option, oh, I'm just thinking, you know, the price is going to go up, I'm a, you know, make a profit and that's it. But sometimes if you are not being careful like me and forget to sell your call option or put option, you can wake up to getting a put assignment or a call assignment, and you actually own those shares that you were doing with your call options or put options. So here's an example of someone who was assigned a Tesla call options. Basically, good thing he only had one contract, right? But think about it, if he had more than 2 or 3, he would have bought $170 worth each, 100 of them. You know, $170 each of the stock of Tesla, 100 of them. Yeah, it came out to 17,000. So I think the guy woke up and was wondering, how am I owning 17 grand worth of shares of Tesla when I was just doing call or put options right before? I want to show you guys actually how this happens and why this happens. This guy even asked a question on Reddit. So hey, all, just trying to understand better if this is a Robinhood thing or all brokerages are the same. which I want to tell you guys, it is not the same. This is why it's a good thing some of us, and I hope you are as well, using Robinhood, because it is the safest, it is the easiest to use as a beginner trading and being a investor. So market closes at 3 p.m. I sold the 170s and the price ended up the day around 165. I figured I was good, so I didn't close the position. Keyword, I didn't close the position. After announcement, the stock runs up to around 171 at 4:15 p.m. and I got notified my shares are being assigned. At what point can I feel safe calls I've sold that are out of the money and the day's close won't be assigned? Is it up until 5:30 Eastern later? So basically, this is a great question, and this is what I mean. You never know, man. So this guy was thinking that he was good because his Tesla was at 165, and they went up to 171 by 4:15, and he literally got assigned of the contract. And this is why it's a very dangerous game with, call options and put options. You got to make sure to close out your trades. And this is something I actually learned not too long ago, because I almost got assigned. I actually didn't get assigned, but basically what happened was the stock got sold for me on Robinhood because I didn't have enough buying power. But if I did, which if I would be using any other account like Fidelity, Charles Schwab's, or whatever, I could have potentially purchased or been assigned the stocks that I was trading options on. So the key word is you got to close your position, and you got to make sure you don't have enough buying power, in your brokerage account. So let's look at how a stock assignment can happen when you are doing call options. Basically, things that you should know is in the money or out of the money. In the money is if you were right with your call option. So just like this guy he was thinking he was good, but it actually got in the money at 171, and this is why he got assigned. If it was out of the money, he would have probably just lost his premium, and it would probably expire worthless. Yeah, so also I just wanted to share you guys this, and I wanted to take a deeper look at Tesla on Robinhood. So for example, right now today we are trading at around 345, with the market being only 99 cents down currently, right? And we are being traded around 346, around there, 345 currently. If we go back to a week, we can see our high was around 366 and our low was around 303. If we go to a month, we can see that this changes now. Again, our high was around 351 and low was 213. And damn, that was a crazy month. If we really look at it, damn, Tesla was doing numbers. If we look at 3 months now, we can even see the low and the high. Let's say for this week we wanted to do a call option, right? And let's say we wanted to see if this is going to hit the new all-time high of 365. So let's just say we are going to go into the call option. We want to say 365, right? And we are going to say, let's say November 22nd, which is going to be a Friday for me. So as we can see, this call option, we are doing a buy and a call. The current price for it is $3.15. If I would to, so if we actually check out the watch list for this Tesla 365, we can see that it does have some potential to actually go up even higher. But I am not sure if it is possible to reach that by only Friday. So anyways, just by looking at this, since it's expiring on November 22nd, if let's say I wanted to buy this call option, and if it would to actually go higher than 365, and let's say it would be at 366 right now, if I didn't close out my position by November the 22nd, then I would have to purchase 368 worth of them stocks if I didn't close out the position, which is tremendous amount of money. We would have to have 33,000 in our account to be assigned this call option if we did not close out our call option and didn't take out the profit from our premium. So anyways, guys, this is just an example that I wanted to show you guys. So if I did have in my brokerage account more than 33 grand and I didn't close out my call option, this could happen to me. You could literally be assigned these call or put options, so be careful and just be mindful that when you are doing call options or put options, just because you're making profit and you're in the good and you are holding and you're not selling, don't get caught lacking like me, because as you guys can see, thankfully I was using Robinhood, because Robinhood tries to sell your call or put option before you get assigned. They automatically do it for you as long as you don't have enough buying power in your account, on your brokerage account. Keyword, be careful. And I hope this video helps you guys, and if it has, hit that like button and let me know in the comments if you guys are trying to see videos like this more often. See you guys next time. Peace.